Equity Bank Chief Executive James Mwangi maintained Equity Bank will not be revising its best lending rates upwards beyond its self-imposed ceiling of 25% anytime soon, despite the high interest rates regime that has seen commercial banks lend at as high as 32%.
Equity chose to cap its interest rates at 25, while the average interest in the banking industry is 32, to provide that leadership. That yes, we can cap our interest rates to where the treasury bills were.
Mwangi says a high interest rate regime will pile more pressure on the cost of borrowing, making credit access beyond the reach of many.
Equity also would like to be fairly responsible and not to distort the objectives of the monetary policy. At the moment, interest rates are high to try and tame inflation and at the same time stabilize the exchange rate.
We commend the central bank effort in managing and reining in inflation. I think given the level of inflation now, it is beginning to be imperative for the Monetary Policy Committee to consider adjusting the CBR rate downwards so as to ease pressure on the cost of borrowing.
James Mwangi, who has been named the Ernst and Young Entrepreneur of the Year, points out the lack of automation in the government procedures as an impediment to business in the country.
You would imagine the benefit in terms of efficiency that this country would reap if we completely computerized our ports.
Equity, which started off as a building society, has grown to be the second largest bank by asset base, with branches in the region. Boni Tunya for KTN Live at 1.